Good morning, everybody. SF Live, episode number 57. My name's Kai Hoffman. I'm the CEO of the Soar Financial Group. In a few seconds, I'll be joined by Blaine Monaghan. He's the president and CEO of Fremont Gold. But before then, I hope everybody had a great Canada Day yesterday. Make sure to follow us here on YouTube, on Twitter. Subscribe to our channel, and most importantly, also use hashtag AskFRE, the company's ticker, for your questions today. We'll be chatting with Blaine for about 15-20 minutes, so make sure you get your questions in while we're talking live to Blaine, and we'll make sure to ask him directly. That's it from my end. Let's switch over to Mr. Blaine Monaghan. Blaine, how are you doing? I hope you had a great Canada Day yesterday.
I'm doing great, Kai. I can't say my Canada Day was full of fireworks. I didn't log on to that virtual firework that they were having, but yeah, it was a nice day. Very good.
Yeah.
Thank you.
Well, weather-wise, I think we crapped out here, to be honest. here in Vancouver, you're not too far from me here. You're in North Van as well, if I'm right. So the weather yesterday just wanted me to stay in bed and not barbecue, but you know.
Here we are.
Virtual fireworks didn't sound too appealing either, so I skipped on those. So, but let's chat about Fremont Gold.
Yeah.
Let's talk about how you guys have been doing. You're obviously a bit of a retail story. You're probably one of the earlier stage companies we've had on the program. So it's a bit difficult to phrase questions, talk about metallurgy and stuff. We're not there yet. You just announced the commencement of a drill program. Maybe that's a good start. It's early. What is it now? July? You announced, I think last week? You announced that you started?
Yeah, we announced the start June 25th, and we've completed 3 holes to date. We've actually submitted the relevant intervals for those 3 holes for rush analysis. The drillers have taken a break, and they'll be starting up again July 8th. So drilling should be done by the end of July.
Oh, fantastic. And I was going to hope to ask you that question before any rock chip samples were visible. I'm sure you've been getting a lot of photos and stuff from site. But I was going to ask you, what's the plan? What does success look like for you for Fremont Gold for the current pass of drilling? Because looking at the drill schedule or the targets that you have outlined in a previous press release, it's a bit all over the map. You're not targeting just one structure. You're shooting for success here. You're early stage company, understandable. So what does success look like?
Yeah, and I guess to back up, we were very fortunate to acquire this project from Liberty Gold, and they were the one that did all that early stage exploration work to identify the targets and did the permitting and the bonding. So when we acquired it, it was essentially a drill ready project. We just had to look at it and try to make sense whether the sites that they had permitted made the best sense for us. We did a little rejigging with the help of Andy Wallace and Jamie Robinson, some of our members of our advisory board. So we permitted 20. We're going to drill from 10 of the sites. And yeah, we'll be drilling gold and soil anomalies that have been tested. We're going to be drilling deeper on all of the holes. Like most projects that haven't been drilled since the 90s, the drilling was shallow. So generally nothing in excess of 100. So each hole is going to go through 200 meters. We'll be looking to go deeper to test other stratigraphic targets that have the potential to host gold mineralization. We're going to be testing a fault. But yeah, to answer your question, it's each hole is almost testing a different sort of target. I'm very confident we're going to have success in this program. And what I wanted to do in this first phase of drilling was just demonstrate the success that's going to enable us to go back with a much more aggressive phase 2. And I think this program is going to do it.
Okay, so the first 19 targets are just setting you up for phase 2 now. You're going to hone down. How did you define the targets? Let's talk about maybe the basics of exploration first.
Sure. So, one of the advantages of acquiring a past producer like Griffon is that there was a lot of data available. So this was a Carlin mine that was, first discovered in the early 80s, first drilled in 88. It only saw 214 drill holes drilled, most of those delineating the deposits they ultimately mined. And it was only in production for 2 years, in 98 and 99. Alta Gold, the past operator, went bankrupt. Gold was collapsing through 300. They had operational issues in another asset. And it hasn't been drilled since that time. But Liberty Gold, when they picked it up in 2012, they did a lot of that early stage exploration work, like the soils and the mapping and the geophysics, and they permitted and bonded it. So a combination of the historical data from Alta Gold plus the data that Liberty Gold generated really helped identify the targets. And because we understand the deposit type, it's a Carlin deposit. It was a Carlin mine, so you really understand what you're looking for. And also the people we have on the advisory board were quite helpful also.
Okay, so coming back to my original question, so success, like what does a successful drill hole look like for you in this program?
Yeah, so I think unless you really understand Carlin type deposits, the sort of intervals that would look like success for ours might not set pulses racing. But I mean, what we're looking for here is near surface oxide gold mineralization. So anywhere from, within 50 meters of surface in intervals from 20 to 80 meters of, say, 0.6 to in excess of a gram per ton gold that's oxidized. And that was the sort of typical profile that they were drilling at Griffon. So when they mined it, it was a strip ratio of 0.1 to 1. They had metallurgy, they had recoveries in the 80% range with a one-stage crush, and even run of mine it was 60%. And this was profitable at $300 an ounce gold. So I mean, that type of operation, although those intervals don't look sexy, you put enough of them together and you can build volume, you could have a very robust operation that would be attractive to many different types of operators.
No, and those are typical grades for Nevada. So I think Marigold is mining with a cutoff of 0.15, if I'm not mistaken, right? So that's their cutoff.
They're mining and basically their grade is 0.5. Yeah, 0.47, right. 0.5. Yeah.
Something like that. So it's really low, and that's fine. Like what we want to see is like the longer interval, I think, of that material. I think to put it together, the bulk potential, that's what you need to see. So 3 holes in the lab. How many holes was it in total? I think 19 I saw. Was that correct?
We've permitted 20 drill sites, but we have selected 10 as priority drilled targets to drill because we have limited the program to 10 holes.
10 holes. Okay, got it. Because I saw like in that description, I think it came down to 19 or something like that. So, okay.
And then we permitted another one. That's right. Okay. So it went from 19 to 20.
Yeah. Okay, fantastic.
So we'll be drilling 10 holes, approximately 200 meters per hole, so about a 2,000 meter RC program. So we've completed 3. Drillers are on a break. They'll start up again next week for the remaining 7. And so we should be done by the end of July.
Okay. You bought the project from Pilot Gold / Liberty Gold, subsidiary of Liberty now. Run us through the terms real quick. What kind of payments are upcoming? Is there anything that should be worried about in terms of cash?
No, and that was a really important consideration when we were out there last year looking for new projects. So we picked up Cobb Creek initially from Contact Gold in October. Then we picked up Griffon from Liberty in December. So when we were out there looking for new projects last year, first off, we were pivoting to more advanced stage gold projects. So we were looking for projects that had current or historic resources or were past producers. Had to have the potential in our minds to host at least 1 million ounces gold. Had to be in the western U.S. and of course almost all of them were in Nevada. And the terms had to be favorable. I mean, we've seen it time and time again where companies enter into deals and in their rush to acquire an asset, they might enter into agreements that could be onerous or at the time didn't seem onerous, but then the markets turn against them and it can be difficult to raise the money to advance the project. So one of the things we were really concerned about or really cognizant of also were the terms. So the terms, I think, for both Cobb and Griffon were very reasonable. So for Griffon, it's only $320,000 US over 4 years. It's more heavy on the share side. So we've already issued Liberty 2.5 million shares. And on the first anniversary, we will issue them another number of shares that will bring their total ownership to 9.9%. And that's what Cal Everett, the CEO of Liberty, really wanted. He wanted to have a lot of exposure to Fremont in case we have success at Griffon. He wanted to make sure that if we do have success, it's something he can talk about to his shareholders.
Has Moira Smith at all helped out to position some of the drills, or has she given you any input?
Well, except for being supportive, no, but she would have been behind that input initially in their program as far as overseeing the exploration program and the permitting and bonding, et cetera. So I haven't heard anything from her that causes me any concerns. I just receive positive messages from everybody at Liberty.
No, that's good because if Cal wants success, like I think Mora can be really important as well. And you got a great technical team. Don't get me wrong, but Mora
Yeah.
is also really really well regarded. And since she had the
Oh,
project under her fingers, right?
well, and
Sure.
absolutely, and that's why it's so great to get an asset from them, because you don't need to reinvent the wheel. You can trust the work that's been done, and I believe the potential was absolutely apparent. It was just a project that really got orphaned in their portfolio. I mean, when they first acquired this was one of their more high-ranking properties. Then they got distracted by Kinsley and Goldstrike. Now they're 100% focused on Black Pine, and Cal is convinced they're going to be acquired. He's probably right. So he's been divesting all of his non-core assets, like Kinsley to New Placer Dome, Griffon to ourselves. He sold the Turkish asset. He sold a net profit interest in Rawhide. So he's been looking to crystallize and unlock all the value so he can direct it towards Black Pine.
Yeah, no, that makes a lot of sense. And Griffon is like, if you look at the other stage projects they had in their portfolio, way too early stage. Even Gold Strike and Black Pine now is off to the races here as well. Let's talk about Cop Creek real quick while we're covering the exploration projects. What's the plan there? I think that's more on the back burner. You're still doing some early stage exploration work, and you also have some permitting work to be done, correct?
Yeah, I really like Cobb. It was the first project that sort of met the criteria we were looking for. I think the terms were quite reasonable. When I look at Cobb, I think it's probably a year or two behind where Griffon is right now. I mean, obviously, all that work had been done at Griffon. It was permitted and bonded. Whereas Cobb, it does have a historical resource. It has close to 200,000 ounces gold. But it's in a different deposit type, a mesothermal orogenic vein system. We think it has better Carlin type potential. So what we need to do is do the type of work that Liberty had done when they first went back into Griffon. We need to do the soils, the mapping, the geophysics. We need to approach it through the Carlin type lens to identify the targets and start the permitting process. So that could take us to do, as far as the exploration and the permitting, a year or two. I would love to have the budget to do that right now, but we don't. But it is something I would like to advance. What I see happening ultimately is we're going to have success at Griffon. We'll continue to access more capital. Then I can carve out some budget to start that work at Cobb and get it ready, because it does warrant a drill program. Absolutely.
Yeah, fantastic. Let's talk about the financials and the cap structure itself. Like you mentioned that you're sort of tight on cash. Most juniors are, unfortunately, especially early stage companies. It seems like the tide is turning a little bit, and you got lucky raising money in February before COVID really hit, and before PDAC as well. It seems like the PDAC curse was especially brutal this year, at least for a short period of time. And tell us about the financing. You raised 1.4 million, 1.5 almost. Tell us a bit about it. Who came in? Where was the interest coming from? Because you upsized as well.
Yeah. So I mean, it's funny, when we raised that money, it was a 6-cent unit with a full warrant at 10 cents. And honestly, I wasn't too happy about the price. I think we really got beat up last year because we did have some assets. We had some projects in and around McEwen's Gold Bar. We dropped Gold Bar, we sold Gold Canyon, and we had to go back and look to rebuild the portfolio, hence our hunt for advanced stage gold projects last year. And honestly, when we were out there, raising that money, I wish I had more time to market what we had, Cobb and Griffon, before we had to pull the trigger on the financing, but we didn't have that luxury. No. So we initially went out there looking to raise $1 million. The interest was quite strong, I think, because of the terms, because it was a 6 cent and a full 10-cent warrant, I think was attractive when you looked at our team, where our projects were located, and the projects themselves. So we were able to increase it to 1.5, thankfully, at the time. And that, enabled us to be able to know that we had enough to fully fund that first phase drill program at Griffon. And obviously, since that March and PDAC curse and COVID, I mean, everything obviously went into the toilet, and now things are rip roaring. I mean, just up until a few months ago, I mean, things were just as bad as they ever had been, if not worse, in that 9-year period, and things have changed on a dime.
Yeah, no, I'm really curious. I got a lot of questions in that regard lined up as well. Like, we're going to get to that, but let's talk about the terms again real quick. And you issued 6-cent shares. The market really had you by they had you. You were pretty much broke at the end of December. Looking at your financials, you had the marketable securities from McEwen, but that was pretty much it. Cash wise, you were pretty much dry. So the market was able to dictate the terms, unfortunately. And it seems like you attracted a lot of investors that just dumped the shares as soon as it became free trading.
I think that's not entirely true. I think when you look at the volume and that money raised at 6 cents, that was essentially 25 million shares. So we haven't seen that many shares traded since they first became free trading. Certainly there are some people that are going to take a profit when you're on a double, at which we are right now. And I expect that we might even see some of those warrants coming in right now. But as far as most of the participants in that last financing, I consider them friendly. But yeah, anytime you're sitting on a double, you have to expect that you're going to see some shares sold. And that's prudent. I mean, I can't begrudge any shareholder that. That's why they invest in these companies.
No, that's fair. Like, people got to make money as well, right? But you can see that you hit 14 cents and then the share price dropped below 10 cents again for a few days. And now you've been saved by the gold price, obviously. We were talking about the warrants. You said there might be some exercising happening. I asked you before, like, there's no acceleration clause or something in there that would force an exercise. And let's say the market stays as it is. We're at 1777 gold or something, and everything's looking super dapper, right? Or super positive. That's the word I was looking for. What kind of money would you bring in if the warrants were exercised?
Yeah, that would bring in approximately $2.5 million. So, and one of the, it was actually well designed, the financing, as far, and I had really no input on that. It was a full warrant. I don't really like a full warrant, obviously, but as you're saying, I mean, the market sort of had us by the short and curlies. So, but one of the real smart things that the broker behind the financing suggested is, listen, we'll make it a full warrant, but we'll just make it for 1 year. So if you have success, they will get exercised. Otherwise, they're just going to disappear. So, and I think that's going to happen. I mean, we're drilling is underway. I think we're going to have results that meet market's expectations. And for people to basically crystallize the value of the warrant, they're going to have to exercise them shortly. They wouldn't be able to sit on them for too long.
No, actually, that is a very smart move. I didn't know that the 12-month warrant was only for 12 months. That makes a lot of sense. So that's going to help. Cap structure real quick. You have 81.5 million shares out roughly. A lot of warrants just expired as well. So the cap structure is becoming a bit cleaner almost monthly right now. Like, can you just give us a rundown and what investors can look forward to in terms of cap structure?
Yeah, so we just had approximately 5 million warrants expired June 30th. So those are now off the table. We were at 124, now we're at 119. And there's going to be a similar amount expire at the end of the year.
Okay. So it's becoming cleaner. I like that personally. So
yeah,
because they're all 25-cent warrants, I think, as well. Is that correct?
Yeah, one was 25, one's 20.
Okay.
The 25 one just expired. The next one will be 20. And then there will just be the 25 million left at 10 cents, which I do expect to get exercised, yeah.
Okay, fantastic. So you raised $1.48 million. Run us through the use of proceeds for that.
Yeah. And this gets back to your question when you're saying you're looking at our year-end financials. You could see we're basically out of money. We were. I mean, insiders, we were no longer taking salaries. We had deferred salaries since August. So when you look at the money we raised, and we also, we're making property agreements in the time when we had to put up hard cash. So we're taking loans from insiders to do that. So when you're looking at that approximately 1.5, I mean, a good chunk of that had to go back and pay accrued liabilities. And then, of course, we were budgeting 400,000 Canadian all in for that drill program. So right now we're sitting on about, I'd have to look, but between 800,000 and 900,000 Canadian. So that will see us through to the beginning of Q4.
Okay. No, well, like, you're an exploration company, so there shouldn't be a big shock to people that you have to raise money again at some point, right? So it's part of the business. What does the G&A look like right now? And what's obviously you're drilling, so let's take that out. But like, what's the G&A look like?
G&A all in right now is about 60,000 a month.
Okay. And I noticed you have quite a few. Oh, sorry. Go ahead.
Oh, I was going to say, our management team is quite small. I mean, I'm the only full-time employee. Dennis, the president, is very much part-time. Clay Newton, our VP of Exploration, is part-time. Our CFO is part-time. And we have someone helping out on a part-time basis on IR, someone actually who I worked with when I was at Camplatz, which was acquired by Goldcorp for over 300 million in 2010. So our G&A on management salaries is quite attractive, and we don't actually pay members of the board or their advisory board.
Yeah, advisory board is a good point, because I noticed a familiar face like Derek White on there, and like I know he's busy with Ascot right now, but he's an engineer. Like, what's the point? I point him out because I know him personally as well. Like, what is his value attrition like? And he's not getting paid though, right? So, like, what's the point of the advisory board you have?
Yeah, I think it's almost like an extended board in the sense that, I mean, these people obviously don't have any sort of fiduciary duties. They're just some additional voices, trusted voices we can call upon, people that we've established relationships that say Derek has a very strong relationship with Dennis. Obviously, Derek, and I know Derek going back a long time also, and you know, he's a very successful, smart guy, not only on the engineering side, but you know, on the project side and evaluation side and capital market side. So he's just a sober voice you can bounce ideas off. So that's how I look at the advisory board, as people that can add value in different ways. And like Andy Wallace, who, you know, is Mr. Nevada, or Jamie Robinson, who used to be the exploration manager at Griffon and was behind one of those discoveries at Griffon, and of course Doug Hurst. So these are just all people that we can bounce ideas off that might have influence in different areas that could help us achieve our goals.
Okay, perfect. Coming back to the financing element real quick, because there were a couple more questions. Obviously, you have to raise money again. My point is, like, I've been hearing from a lot of companies that the phone is actually ringing off the hook and they're being offered a lot of money by brokers, and you had some good broker support in your previous round. What's that looking like right now? Are you more cautious? Are you waiting for some results to come in to hopefully raise at a higher level? Or are you at that point like, screw it, we'll just take any money that we can get at this point, and I'll raise at 10 cents again and with a half warrant at 15 or something?
Yeah, I mean, you know, it all depends how much you want to gamble. I mean, I don't think I'd be in a hurry to raise right now, just because we don't need to. The program is fully funded. I mean, we have submitted those 3 holes for rush analysis, so we could have results sometime in July. Then we have the balance of the holes, which we could have sometime in August. I think we're going to have success in this program. So, you know, if you are risk adverse, if someone called you up right now and wanted to offer you the money, you'd probably take it. But I'm also very cautious about who I want to be involved in the company, and what their goals are. So for the right person, I mean, that might be something you might entertain, but it's something I'm not really contemplating right now.
Yeah. So if Soar Financial would call you and said, Blaine, I got $3 million for you, 10 cents with a full warrant at 20, would you take it?
For you, Kai? Sure.
Okay. No, it's perfect. Point made. And let's check that off. We sort of actually hit our time limit already. I told you before, like 20 minutes go by way too quick. And you mentioned like next upcoming catalyst. Let's summarize that real quick. What's up? What's next for Fremont?
Yeah, so we just finished the 3rd hole the other day. I just received a picture from Clay in his truck, dragging all the samples up to the labs. So, and we have rushed those. So I would expect to see those assays in the next, say, 2 to 3 weeks. Drilling will resume again July 8th. We gave the drillers the sort of July 4th week off. So drilling itself should be complete by the end of the month, and then see the balance of the holes sometime, you know, late August, early September, depending if we want to rush those ones also. But I think it was important to get these ones to the lab. Toot sweet.
Fantastic. Blaine, thanks for coming on. Thanks for answering the questions, and thanks for running us through Fremont. Really appreciate it. Everybody else, thanks for tuning in. Thanks for watching. This was SF Live, episode number 57 with Blaine Monaghan, CEO and President of Fremont Gold. Make sure to subscribe to our YouTube and Twitter channels, Spotify, Instagram as well. And maybe just as a quick reminder, we are hosting the first virtual conference, SF Online, on July 8th. We got 8 companies lined up, 2 fantastic keynote speakers. Marcus Busla and Joe Mazumdar will be keynoting. So make sure to sign up at soarfinancial.com/events and stay tuned for more. We'll be back on Monday or Tuesday next week. Thank you so much, Blaine. Talk soon.
Thanks, Kai.